when you get these big deviations from even the 20-week, the 50-week, or the 100-week, you're eventually going to get a correction that pulls you back towards those moving averages again. It's just simply a function of how deviations work. Okay, let's talk about what you need to know before the bell this morning. As we wrap up the month of September, get ready to kick off millennial earnings season. Of course, that's where we lower the bar so everybody can beat earnings estimates. Everybody gets a trophy, of course. That's going to start again as we get into October. Also, that means that buybacks are going to be completely blacked out here shortly. So there's been a few buybacks coming in, but again, that's going to completely go away here over the next 2 weeks until the end of the month, right? So at the end of October, those buybacks will start to open back up again as we get through earnings season. But overall, just talking about the markets in general, again, nothing wrong with the markets. You know, we had this correction back in August. It's just been a rampage of buying since that Japanese yen carry trade. So whatever reversal in the Japanese yen carry trade that we got done in terms of pulling off that margin, that's been completely reversed. So it's just been a very strong rally. Now, looking at this, we're now getting, very overbought relative to, the 50-day moving average, the 20-day moving average, et cetera. Really, those deviations from those moving averages are getting, fairly decent here. And on a weekly basis, this is a weekly chart of the S&P 500. On a weekly basis, we're getting very, very deviated from long-term moving averages. And so again, as we talked about before, we've warned about this before, is that when you get these big deviations from even the 20-week, the 50-week, or the 100-week, you're eventually going to get a correction that pulls you back towards those moving averages again. It's just simply a function of how deviations work. We've seen this repeatedly kind of throughout the history of the markets, but right now, again, markets are certainly, pushing up some overbought levels, as we noted last week. Certainly have some negative divergences going on in both momentum as well as relative strength. But again, if earnings come in strong here over the next couple of weeks, that should help lift earnings. Outlooks are going to be the most important thing. There's a very, very high correlation between the annual rate of change in the S&P 500 and the underlying year-over-year change in earnings. If estimates are graduated higher as we go through earnings season, if earnings season comes in as well, companies talk about strong outlooks, et cetera, and analysts start to ratchet those forward earnings up, that's going to be a lift to markets. That's going to be supportive for markets. So again, it's not going to be just the earnings report that are important to pay attention to here over the next month. It's going to be the outlook for those companies in terms of spending, consumer deterioration or not, outlooks, and particularly when we get into technology, the outlook for AI, what's happening there. That's going to be a huge driver for markets, and particularly the large cap stocks, kind of really across the board. So, again, it's not going to be the number, just whether or not they beat estimates is not going to be the issue. It's going to be the outlook. The other side of this, of course, is, and we touched on this last week, but oil has been getting absolutely thrashed here over the last really kind of 5 weeks. In fact, there's been a massive amount of short selling in oil over the last 5 weeks. So you've got you have one of the largest short position in 5 years right now on oil stocks. Now, again, big short positions on oil tend to lead to at least short-term recoveries as you get a squeeze in oil prices. If oil prices move up for any particular reason whatsoever, you're going to get a move higher. But again, you've had just a tremendous amount of selling in oil prices. So again, there's a getting to be, and again, you have to be patient with this right now. We're not quite set up for it yet, but it looks like we're getting set up for a fairly decent reflexive rally in energy shares if we get a rebound in oil prices over the course, as we kind of get ready to head into the winter months. But again, this is just something where don't do anything with this just yet. There's not any evidence that this selling pressure is over. But oil is getting very oversold. Energy stocks are getting oversold in general, and that's typically been a really good setup for a reflexive rally. That's not necessarily a long-term trade, but a good opportunity just for a reflexive rally in those shares. Okay, that's what you need to know before the bell this morning.